Hello, guys. Happy Friday. It's Sarah here, Bank on Women on the She Is Still Dope Network. If you haven't already done so, please follow my business page on Instagram. I am Sarah Sabastro, or join my Facebook group, Biz Credit Built on Facebook. I am going to be talking about today what business entity is best for you. Also, tune in to the She Is Still Dope Network, or visit sheisstilldope.com. We're a network of women from all denominations who are educating other women, and it's a beautiful network. If you haven't already joined, you're really missing out. I'm going to jump right in today. We're going to be talking about a few things, but I wanted to address what business entity is best for you. I think oftentimes we get lost in entrepreneurship, and we forget to research what entity would best serve our company, right? A business entity is basically recognized as a limited liability corporation, a partnership, a corporation, or an S corporation, and sometimes even a sole proprietor. And we're going to go into details about what each of those mean. Again, most times when people are doing or researching, or even doing research to open up a business, they kind of forget some of the steps, and we've gone over that in my previous shows, but I wanted to dive in deep with more information in concerns to essentially you're structuring your business entity the right way and legally, and what benefits you can obtain from that. So let's get into how to incorporate your business, right? What is a corporation? Most people, when they think about a corporation, they get kind of scared because they essentially associate corporation with taxes, or having more responsibility, or I'm too small, I just started. So let's get into what a corporation is. The root of the word corporation in Latin is corpus, or body. In the eyes of the law, a corporation is a person, and most people don't understand that. This person stands independently from people who formed it and make it run, right? It can sue someone, right? It can buy a car, it can sell a product, it can set up contracts, and it pays taxes. So for business owners, the main advantage of this arrangement is that the corporation itself is liable for all its actions, rather than the responsibility of falling on the individual personally who created it. So most times corporations have an unlimited life. The existence of the company doesn't depend on the presence of it, or one person or a group. So I wanted to put that out there, right? You know, most people mention it all the time. They even have filed and are corporations and don't even know what the true definition of a corporation is. So it's important for us to, again, get into what the meaning is before we sign up for something that we don't know about. So let's get into common corporate structures, right? The most common corporate structures are C corporations, S corporations, and LLCs, or limited liability, like most people call them. Each comes with its own advantages and disadvantages, but each has the central advantage of ensuring that no one in the corporation is personally responsible or takes on that personal liability for its corporate debts or its obligations on the business side at all, even legal obligations. So if someone sues your company, or everyone's personal assets are protected, if you are the owner of that company, or if you sit on that board, or if you hold any corporate position in that company. So let's take a closer look at these corporate structures individually. But I just wanted to give you guys what my definition or a clear understanding of what that is essentially. Now, what is a business entity, or which business entity is best for you, right? Oftentimes when people put themselves in the premise or in the situation of starting a business, they just think because they get an EIN that they are a business. And there's so much more to setting up your business properly than just an EIN. Of course, there are, again, legal liabilities to that. And there are also, all kind of responsibilities on the state and the federal government side that people also don't understand. So it's super important that when you are choosing to set up your limited liability corporation, or coming in as a sole proprietor or S corp, or even a C corp, that you are setting it up correctly, right? And I mean, you can always choose to bring in a professional to do this, but I always advise that you do your research before you do it yourself, because you don't want to do it incorrectly. And if you have to pay a professional, it would be a great investment to do so. And there are plenty of people who do it. You just need to make sure that you are checking all the boxes and filing all the correct paperwork so that you could be recognized as a true corporation or a sole proprietor or whatever, so on and so forth. So give me just a second. I'm going to put up a PowerPoint presentation and we'll jump right in, okay? So which business entity is best for you, right? I think we all have literally choices, right? When we're starting businesses, and most people choose what's easiest, right? The EIN is first, right? And when you go to apply for your EIN, they're going to ask you, what do you want to be set up as? And there are all these choices. So keep in mind that when you are choosing what business entity is best for you, you need to consider a gazillion things, right? So let's get into the first one, right? I shared with you the true definition of what a business entity is, but let me share this file with you real quick. All right, guys. So a business entity is a commercial, corporated, or institution that is formed and administered as per commercial law in order to engage in business and activities usual for the sale of product, a service, or even, I mean, there are a million things that fall under that umbrella. So keep in mind that anything that you're doing on the commercial or corporate side, or any other institution, it is what governs your company, okay? Now, it's essential that an entity is what allows the company the ability to, by law, conduct business. So the state of Maryland, if you're going to operate, as a business of any kind, there are rules and regulations to conducting business in that state. So your business entity is what is filed, or what you're filed as, and what the state recognizes you as. So there are plenty of choices as to which business entity you can choose to apply as, but keep in mind that it is super, super important that you choose which one serves your business better. Now, keep in mind, I keep saying this, it should be chosen with care and it should serve you. Keep in mind that that business entity that you choose may have consequences. There are laws, there are rules, there are requirements that you have to file annually, and there are essentially things that make or govern that business entity. So you got to be very careful on which you choose to set yourself up as. It can also provide benefits, yet they can save you money if choosing well. So I always suggest that you talk to someone legally. So for me, it's my business lawyer or my CPA, and the CPA on the CPA side is going to tell you what benefits on the business side is going to have for you. Your business lawyer on the legal side is going to tell you that it protects you legally from some things. Your business entity does matter. So it has to do with money. So you got to be very careful in both the present and the future. And you want to keep more of your money, right? Like you don't want to operate as a sole proprietor and not get any tax benefits, right? Because if you're making money, guess what? You're going to have to report that money and they're going to tax it. So it may not serve you to be a sole proprietor. If you are providing a service, right? You want to assume limited liability so that you are not personally responsible, like I mentioned earlier. So again, it's very, very important that you choose the right one. So business entities, they recognize certain business entities as they recognize certain business entities in certain states, right? But keep in mind that operating as a sole proprietorship, which means just a regular EIN, you presume that personal liability. So recognize business entities are LLCs, which is limited liability corporations, partnerships, regular C corps, which is just a regular corporation, and then S corps. An LLC, let's get into that. An LLC is not a separate entity according to the IRS, so it isn't taxed. And it's basically playing it safe. Instead of its members paying individual taxes, members of an LLC pay employment tax on their entire net income for the business. So if you are an LLC and you go to file, you'll probably have a Schedule C, right? Where they list what you made as a company in its entirety. You're going to pay employment tax to the state, and they are looking at that net income of your business. That's what gets taxed. Partnerships. In a partnership does not have to pay income tax. Instead, the business will have a pass-through and its profits or its losses straight to the partners, right? Then the partners will include their respective share of the partnership income or loss on their personal tax returns. So I always advise against partnerships because especially if those partners, most partnerships, about 80% of them don't work out. So they eventually dissolve or they change the entity that they are filed as originally. And the legal liability and debt usually falls on whoever doesn't serve that partnership. But keep in mind that when you're doing partnerships, that anything that is done on the business side monetarily, both of you guys are responsible for. So if someone jumps ship, that other partner still becomes just as liable as the original two partnerships. So I always advise against it. But if you do, make sure that you have it set up correctly. Corporations. Corporations may have to pay state and federal taxes. They sometimes also pay local taxes. This will include paying income taxes on profits. The opposite of partnerships or sole proprietorships, a corporation can end up paying taxes twice. First, when it makes a profit, and the second time when its dividends go to shareholders. So keep that in mind. S corporations. The only wages of an S corporation shareholders is those of an employee that will be subject to employment tax. Any remaining income is payment to the owners as a distributions. Distributions are taxed at a lower rate, if at all. So it benefits you, especially if you are making a lot of money. Legal liability. We talked about that. LLCs are the most common type of corporation, and LLCs members are protected from personal liability from business decisions or actions of the LLC. If the LLC incurs debt or is sued, then the members' personal assets are usually exempt unless otherwise noted, because sometimes there are times where, you know, that is exempt, but limited liability is the key word here, right? It definitely protects you and the members that are on that LLC. So partnerships, they retain full shared liability. Therefore, partners are not liable for their own actions. They are liable for business debts and decisions made by other partners. Plus, all of the partners' personal assets can be seized to satisfy the partnership's debt. So if one of your partners makes a bad legal decision and you owe $500,000-$600,000, even $1 million in debt, that other partner can be legally liable, because when they made those decisions, it should have been made as a partnership. And that's why I always advise against partnerships. Corporations. And we're talking about legal liability. So keep in mind that every business entity that you choose has a different legal liability. So within a corporation, the shareholders' personal assets are protected. Shareholders can usually only be held accountable for their investment in the stocks of the company. However, if an employee commits fraud or a felony under that corporation's direction or under the corporate veil, that can be pierced and personal assets can be on the line. So you got to be very, very careful when you are set up as a corporation, because the obvious solution is don't tell your employees to commit frauds or felonies, because then you as a corporation, you know, that corporate veil will be pierced and you be held liable, and everybody's personal assets can be on the line. So just keep that in mind. S corporation. An S corporation, shareholders' personal assets like personal bank accounts cannot be seized for the purpose of satisfying business liabilities. Like verdicts against the company. So keep that in mind. I think most people love S corporations because it's a pass-through entity. So they tax basically the company at the company or the corporate level, then it's employees, then it's business that it's doing business as, then it's employees. So you presume less tax liability and people save a lot of money, especially when you as a corporation are making over a certain amount per year. Cost and shares. I know a lot of people, if you look at some LLCs, when they set it up, there are a certain LLCs and corporations that they write out the amount of shares that someone who is on that company owns. And depending on that amount of shares, that person holds more decision-making power. So keep that in mind. An LLC is another type of corporation that only real difference is the liability rather than the shares and costs. So it works like other corporations. So it's totally up to you. But normally when you're talking to a business lawyer or a CPA in concerns to cost and shares, they will advise you on what's the best way to set up your LLC. Partnerships, the shares vary, and they could also be clearly spelled out on the partnership agreement. If the shares are not specified, they are assumed to be equal, right? 50-50. But most people, when they are doing shares, they essentially do not If it's a 50-50 partnership, then you own 50% of the shares, they own 50% of the shares. If it's not, then it will basically say this person owns 49%, I own 51%. There's usually a person who owns the larger liability, because when you own the larger liability, then that person then can be the main decision maker, right? They also can protect themselves from things like when you're going in to apply for a loan, they're going to ask you who owns the most shares, right? And that person who owns the most shares should be the person who is applying on behalf of that business. A corporation is run by its board of directors. These people are usually also the owners. The ownership stakes are defined by what percentage of stock everybody owns. And if only one person has the controlling interest, which is what I just talked about, over 50%, then their decisions will generally overrule everyone else's. So if you are setting up a partnership, or a corporation, and you are the person who is putting in the most, I would definitely advise you to own the majority of the stock, right? More than 51%, because you want to have the controlling interest and your decisions overrule everybody else's. Sometimes shareholders will band together to influence decisions or even eject a board member, but they can't do that if you own 51% or more, the majority stock in that. Profits are generally distributed per share percentages, although board members can take a salary, but generally they don't. S corporations, a stakeholder or a shareholder working for the company must pay himself or herself a reasonable compensation. And it's so funny because what's a reasonable compensation, right? That is generally talked about with the board of directors who are on your company, and the share, again, holder has to get a fair market value, or the IRS may reclassify the additional corporate earnings or wages. So you can't just pay yourself $1 million in a salary, because if that's not what your average salary of that person is. So you got to be very mindful of that. When are partnerships best, right? And I always advise against partnerships, but partnerships are best because if you're looking to go into a business and you want to share the spoils and the responsibility of what you have going on, then definitely a partnership is for you. The size of their shares dictate how much say they have. Silent partners generally just want to throw in their money and take out their profits, nothing much more. Partnerships carry a measure of risk, and I want you to understand that. The partners are responsible for their own and the other partners doing. That's the biggest risk. So if you have someone who is doing things that are not ethical, getting into debt, likes to spend heavy, then a partnership may not be for you, because you're going to carry that partner's responsibility of their doings, okay? It's imperative that partners also be trustworthy and responsible. Partners also need a plan in the event of someone dying, right? Like, most people don't think about the beneficiary portion. And even when we sell up LLCs or C Corps, or even sole proprietorships, when you leave your assets or your business doings, you should always have essentially a plan. If someone passes away, or if you pass away, what happens to that money, those funds in the bank account, and all of those things. So a beneficiary should definitely be in place for any business entity. Corporations, when are corporations the best? Corporations are a lower risk, usually. Benefits go on the business tax returns, and not the owners, which is what people love about it. Corporations are independent entities, and they also can be held liable in court for negligence. The number of shares will indicate how much power the owner has, and the owners with over 50% of shares aren't always invincible, right? So smaller shareholders can band together to block them or veto a voting. So it's important that if you're going into a corporation, if you want to have the most influence or direction, that you own the most shares, right? And they influence the company's direction better than if they were to act alone. Benefits of an S corporation, right? An S corporation will carry lower risk, but the business profits will be reported on the owner's personal tax returns. However, the owner can save on Social Security and Medicare taxes. Also, S corporation owners are protected from personal liability from its business decisions or actions. S corporations are limited to only 100 shareholders. So those shareholders have to be individuals, or they have to be in a trust or an estate. A foreign citizen cannot be a shareholder of an S corporation. I had someone do that, and then we had to make an amendment to their paperwork because they were a foreign citizen. The company also has to operate domestically. The owners will pay taxes only on the money that they earn from the business. This is recorded as personal income, and the business itself is not taxed. Owners of the S corporation who are also employees pay taxes based on their compensation. This means that they don't pay Social Security or Medicare twice like owners of unincorporated businesses have to. All right, we're getting into the LLCs, right? Please take notes because most of you are set up like an LLC. So when is an LLC best? So a limited liability corporation carries lower risk, but the business profits are reported on personal tax returns. This can also result in owners paying way higher taxes, right? So most times as a business owner, when you are filing your taxes as an LLC, people defer filing their taxes because this can result, if they make a lot of money, it can result in the owners itself paying higher taxes. So most people, once they file the first time as an LLC, the second time they come back like, I need to change my entity to an S Corp or a C Corp. They also pay employment tax on the net income of their business. And LLC isn't a separate entity per the IRS, and yet LLC members are protected from personal liability for its business decisions or its actions. If an LLC goes into debt or is sued, the members' personal assets are usually exempt, and LLCs are often used by groups or professionals like doctor practices and law firms. So let's recap. I know I went over a lot, but let's definitely recap some things that I went over today. And I know I went over a lot of things, but I want you to understand the things that you consider before you choose what business entity is best for you, right? So business entities make a difference in taxes, liability, and cost in shares. Those are the three main things. Choosing the best business entity means that you're considering what will happen to your company if someone sues you, being comfortable with who is an owner and the ownership structure, deciding how hands-on an owner wants to be is definitely one of the other things. So I know I went over a lot, and people oftentimes do not understand what piercing the corporate veil is or what not being set up correctly is. But I wanted to take a moment just to talk about that, right? As a C corporation, there are other advantages that include enhanced credibility with lenders and suppliers, right? Because you're seen as not a small company, but a bigger company, right? Unlimited growth potential through the sale of stocks, right? If you become public, you can sell your stocks. There is no liability to the number of shareholders when you're talking about a C corporation versus if we were talking about an S corporation, there are a limited number. And then the tax advantages, which is super important, right? When you're acting as a C corporation, there you can deduct your business expenses. Probably the largest disadvantage of a C corporation is that its profits are taxed twice. So this is called double taxation, and the profits of the corporation are taxed twice when earned by the corporation itself and then when it's distributed to the shareholders individually. All right. Now, the benefits from the S Corp are no double taxation on the income. The company shareholders pay taxes according to their share of the company, and paying tax is only once per year versus quarterly, like a C corporation. The single biggest drawback I would say from an S corporation is it's due to considerable tax advantages. It's limited to its number of shareholders, 75 shareholders minimum, and a growing S corporation can always change its tax status to a C corporation if it benefits you. And again, I am just trying to point out the advantages and the disadvantages. We went over the LLC, right? Which is the most popular business entity structure for small businesses. It combines the asset protection of the large corporation streamlined with the simplicity of a partnership, but there is no limited number of members to the LLC can have. Any number of people can purchase equity in the company, and they don't have to be a U.S. citizen or a permanent resident to do so. With regular corporations, you can't be a foreign national. Finally, an S corporation, there's no double taxation on income, and pass-through taxation means less paperwork and more profits, but you pay more taxes. So I know that was a whole lot to take in. The hope is that you took this information and that you took notes. I definitely encourage each and every one of you guys to tune into us next week, Friday. We're going to be talking about, I'm going to share a checklist with you guys and a list of corporate documents that should be filed so that you can be recognized as each one. Because I think that sometimes even when you file your EIN, there are some supporting documents that you should be filing with those official EIN documents to recognize you as a C corporation or as an S corporation or a regular corporation or a partnership. And most of you guys don't do that. I got an EIN, but no, you got to make sure that your paperwork is definitely in order. I definitely encourage everybody, if you haven't already done so, to visit sheisstilldope.com, join the network. It's a beautiful network of women from all backgrounds, all different type of professionals. We have shows like this on an ongoing basis, weekly, and I definitely encourage all of you guys to apply. If you haven't already done so, join my Facebook group, Biz Credit Builds, and also my Instagram page. I am Sarah Sabastro. I appreciate you guys tuning in, and I'll see you next Friday. Bye-bye.